Imagine I created a city in cyberspace that had only 21 million blocks, and one day 8 billion people will want to live there. And they're never going to make more than 21 million blocks. And all 8 billion people can move in, and there's no mayor to put a zoning restriction on it or pass a city tax. And there's no governor to put a state tax on it. And there's no president or Congress to put a national property tax on it.
A popular consensus among Bitcoin investors and enthusiasts is that the leading cryptocurrency has a number of qualities that make it completely incomparable to every other investment instrument or asset class in the world. Whether it's stocks, bonds, cash, or real estate, everything falls short in one way or the other when compared to Bitcoin. Michael Saylor, the founder and executive chairman of Virginia-based business intelligence firm MicroStrategy, is undoubtedly one of the biggest supporters of this notion, and he always manages to communicate Bitcoin's importance in the simplest and most fascinating way. During a recent interview with Gardner, the renowned business executive talks about these qualities, taking the interesting position of someone trying to orange pill an investor for the first time. In his analogy, Saylor uses the example of the most predominant economic issues in the world today: monetary inflation and currency debasement. He explains that most people fixate on consumer inflation, which governments have been known to repeatedly manipulate. According to Saylor, the important kind of inflation, the one which decides if you are able to build your wealth, just maintain it, or gradually grow poorer over the years, is monetary inflation. It is the rate at which you have to grow your wealth in order to maintain it or beat it if you wish to multiply your wealth. For the United States, the world's largest economy, that rate has been an average of 7 to 8% over the past 100 years. For weaker countries, it has been around 14% per year. But that was before central banks went on a reckless money printing spree during the pandemic. So if you wish to grow your wealth in the United States, you have to invest in assets that yield at least 9%, 15 to 20% in almost all the other weaker economies across the globe. But what asset will help you achieve this over a period of 30 or 40 years? It's been established that the S&P index, one of the top stock indexes in the United States, only returns an average of 7% annually, helping you maintain your wealth but not increase it. It's an even bigger disaster if you decide to hold your wealth in a fiat currency like the dollar, which has lost over 95% of its purchasing power in less than 100 years. There is a similar problem with gold and bonds. While the former will help you maintain your wealth better than cash and equities, the latter will further erode your wealth, so you end up with only a tiny percentage of what you started with. According to Saylor, Bitcoin is the only asset that will help you maintain and grow your wealth, primarily because it is the one truly scarce asset with a permanently capped supply. Unlike assets like the dollar and gold, with ever-increasing supplies, Bitcoin will never exceed 21 million coins, which means it will continue to appreciate over time. We will now bring you clips from Saylor's Bitcoin Masterclass interview. But before we do, help us grow the channel with a few simple actions. Give this video a thumbs up, subscribe to the channel, and don't forget to drop your comments and observations in the comments section below. Thanks and enjoy.
So Bitcoin is a conservative monetary network. In fact, there's no heat lapse, there's no leakage, there's no inflation. So if you're looking for something that you can hold for a long period of time, it's kind of like a freezer for your money, right? If money was food and it was spoiling over the course of days, you want a refrigerator, you put the food in the refrigerator, it doesn't spoil, right? So Bitcoin is like that. It's a way to freeze your economic energy so that it doesn't dissipate. And that's the first big idea. But the second idea is Bitcoin's a bank in cyberspace. So it's kind of a bank, a money transfer network, and it's the money. So it's all three of those things. So this is not as important to Americans that have a bank they trust. But if you live in Africa and the bank is run by the cousin of the guy that just took over the country last week, then if you put your money in that bank, they're probably just going to take it. And if you want to convert your money from that local currency to another currency, they probably take half. Oftentimes, the capital controls are such that the country will fix the exchange rate at half of the real value. So every time you change money, you give half of it to the bank and you get the other half. Wow. And it's not a terribly fair thing for the proletariat. But what Bitcoin allows you to do is, if I wanted to buy your car and you were in Africa, I could pay you for your car in Bitcoin. and then you would get the fair exchange rate for the Bitcoin. Then you could hold the Bitcoin either on your own hardware device, you could be your own bank, or you could deposit the Bitcoin with a custodian somewhere outside of your country, because Bitcoin is a global network. So everybody in the world, anybody can be a custodian of Bitcoin. So there's competition. So you would have an asset which is pure property, which is not being debased by capital. It's not being debased by manufacturing or devalued by manufacturing, and it's not being devalued by monetary inflation, right? And you would not have to rely upon the local banking system, the local government, or the local currency. All three of those are weak links. And if you look at wealthy people, most people that are wealthy in the world are wealthy because they converted their currency, whatever they earned, they converted it into property. Like they bought, what does the royal family of the UK have? They own the middle of London. What does the emperor of Japan have? They own the middle of Tokyo, right? If you own a block in New York City or Paris, then when would you ever want to sell that? You probably never want to sell it. You want to keep it forever. And if you want to stay wealthy, you buy that land and you hold it because it appreciates in value at the rate that the money collapses. But if you want to get wealthy, then you go leveraged long. So like if I can borrow a bunch of money, if I can borrow $10 million and buy $10 million worth of scarce desirable property, then every year it goes up in value 7%. And after 10 years, it's doubled in value. So now my $10 million acquisition is worth 20 million and I've got 10 million in equity. So then I refinance the property and I take out 5 million in equity and I live off of that without paying tax on it. And the next 10 years, the $20 million property is worth 40 million. And then after 10 more years, the 40 million is worth 80 million. So you see how your family starts to become very wealthy because your grandfather bought 10 blocks in the middle of New York or in the middle of Paris or some city. Of course, it has to be scarce desirable, right? People have to want to live there.
Comparable to scarce desirable assets like a block of real estate property in Tokyo or New York, Bitcoin is a scarce desirable digital asset that will shape the next era of human history. It's no news that the world is rapidly going digital, and investing in Bitcoin or other top cryptocurrencies today is like purchasing a property in any of the world's top cities 50 or 100 years ago. Just as those properties did not become so valuable overnight, it is necessary that the cryptocurrency space, which is still a nascent industry, is allowed more time to grow and develop. The pace of the industry's development in its 14 short years is already a very amazing feat, regardless of current price movements. Let's get back to the interview as Saylor further discusses the importance of owning and holding Bitcoin.
You could think about Bitcoin as cyber Manhattan. Imagine I created a city in cyberspace that had only 21 million blocks, and one day 8 billion people will want to live there. And they're never going to make more than 21 million blocks. And all 8 billion people can move in, and there's no mayor to put a zoning restriction on it or pass a city tax. And there's no governor to put a state tax on it. And there's no president or Congress to put a national property tax on it. And when the place where you live decides to tax it, you can fly on an airplane, to Singapore or Monaco or some other place that will give you, or you can move from one state. Maybe you move from a high tax state to a low tax state, and then you keep your property. So Bitcoin represents digital property, and it represents a property right to 8 billion people that is being driven by the adoption of the billions of people. I mean, everybody in the world wants property rights. I mean, it's been the driving theme of human history for thousands and thousands of years. That's why people came to America. That's why they went west. That's why they went anywhere. So that's a very deep-seated theme in humanity. But the second thing is everybody wants money, and you either want it if you don't have it, or you want to keep it. Right. And there's a whole set of dynamics of people that are actually passing laws to basically deprive you of your money. If you own assets that generate rents, that's a currency derivative. The rents are going to be devalued. If you own bonds, that's a currency derivative. They're going to be devalued. And every single fiat currency in the world is built to be devalued. The only question is, will it be devalued at 7% a year versus desirable assets? Or will it be devalued at 14% a year? Or will it be devalued at 40% a year? But it is 100% certain that the currencies will be devalued. The bonds are going to have a negative real yield. They'll be devalued. Value stocks and commercial real estate that's valued partially on the cash flows will be devalued. So Bitcoin kind of represents more like that trophy asset, like the one of a kind trophy piece of art, or the one in a kind franchise, or the one in a kind beachfront property. Everybody wants. It's not valued based on cash flows. It's valued based upon its scarcity and desirability. Now, we have lots of examples of people that buy Ferraris as a store of value, or Rolex as a store of value, or commercial art, or art as a store of value. But the ideal money is something liquid and fungible. And Bitcoin is liquid and fungible. So it's like that high quality, desirable real estate, but it's like buying a pure city block in the most desirable city on earth. And it's got a global brand, because it's not, Tokyo's only interesting if you speak Japanese, and Paris is maybe interesting if you speak French. But, Bitcoin is neutral in cyberspace. The Chinese like it, the Russians like it, the Americans like it, the Europeans like it, the Africans like it, the South Americans like it. Why wouldn't you like it, right? It passes this last Bernard Arnault test, which is, you ought to buy something that someone richer than you and more sophisticated than you will want to buy from you in a decade. And if that's what you're buying, then you're probably going to be okay.
Meanwhile, Coinbase Chief Executive Officer Brian Armstrong says the 2024 U.S. election year will be a pivotal year for the cryptocurrency industry, urging participants to bolster crypto lobbying before the election for better growth and development in the United States. In a recent interview, Armstrong notes that U.S.-based crypto firms are facing an unfair regulatory environment and that certain members of the government are making it difficult for the crypto industry to thrive. It turns out this year, we've had to turn our attention, of course, to the policy side, he notes. It's a really unfair environment that we are in right now, where every startup in the space is just getting hit with a subpoena or Wells notice. There's a really concerted, focused effort right now to try and curtail and kill this industry. Specifically, I think the two actors I've seen that are most responsible for that are probably the SEC Chair Gary Gensler and Elizabeth Warren. Armstrong, however, adds that Gensler and Warren's anti-crypto sentiments are not necessarily shared by other members of the U.S. government. He also suggests that the industry needs to get more sophisticated and powerful in terms of lobbying efforts before the 2024 elections to see meaningful change in the regulatory environment. Earlier in the month, Coinbase launched a 14-month initiative to that effect, asking digital asset owners to contact their representatives and advocate for pro-crypto laws. Do you think this is the step in the right direction for the industry? How do you think increased lobbying will impact crypto asset prices next year? Please drop your replies and comments on Michael Saylor's interview in the comments section below. Also, ensure you like this video, subscribe to the channel, and turn on post notifications for more videos. Thanks for watching.